Let us first forget about AI, technology, algorithms, and complicated financial terminology. Before we build our hedge fund research model, we need to understand one very simple question. What exactly is USDINR and why would anyone want to trade it? USDINR simply means the exchange rate between US dollar and the Indian rupee. When we say USDINR is 83.25, it means 1 US dollar costs 83.25 Indian rupees. So if you want to buy 1 US dollar, you need 83.25 Indian rupees. Now, the important point is this number does not remain fixed. It changes continuously as the market changes. For example, USD might be 83.25 today, tomorrow it could be 83.50, or it could move down to 82.90. These movements are what create opportunities for people who trade currencies. Why does USD move? The next question is why does the value of the rupee change against the dollar? There isn't one single answer. There are many things happening in India and around the world that influence the exchange rate. Let's take a simple example. Consider oil. India imports a large amount of crude oil, and international crude oil is generally priced in US dollars. If oil becomes significantly more expensive, Indian companies need more dollars to pay for those imports. That can create demands for dollars and put pressure on the rupees. Now consider interest rates. If interest rates are expectation about interest rates change in the United States or India, investor may change where they keep their money. The movement of money can affect the demand for dollar and rupees. Then we have foreign investment. Imagine that the international investors are investing heavily in Indian companies. They may need to bring dollars into India and convert those dollars into rupees. That creates demand for rupees. But if investors decide to take money out of India, they may sell rupees and buy dollars. That can work in opposite direction. We also have economic news and major events, government decisions, central bank announcement, inflation number, economic growth, election, geopolitical events, and development in the global economy can all influence the currency market. So USDINR is really a reflection of many different forces interaction with each other. Why do people trade USDINR? Now let's come to the important question. Why trade it? There are actually two major reasons. The first is protection. Suppose an Indian company needs to pay US supplies 10 million 3 months from now. The company does not exactly what the dollar will cost 3 months later. If the dollar becomes more expensive, the company may have to pay significantly more in rupees. So the company can use the currency market to protect itself from the uncertainty. This is called hedging. The second reason is opportunity. Traders and investment funds study the market and try to identify the situation where they believe USDINR is likely to move in one particular direction. If their view is correct, they may be able to make a profit from the movement. This is where our hedge fund model comes into the picture. What is the purpose of our hedge fund model? Let's keep this very simple. Imagine that instead of having a one person sitting in front of computer all day looking at USDINR, we have a virtual research team. Its job is to continuously study the market. It asks the questions such as is USDINR likely to move up or down? Why might it move in that direction? What information support that view? When would be a suitable time to enter the trade? When should we exit? And most importantly, what could go wrong? This last question is extremely important. A professional trading operation is not simply trained to predict the market correctly, it is also trained to control losses when the prediction is wrong. How does our model work? The overall process shown in the bottom of the slide is very straightforward. We start with collecting information. The model looks things such as USDINR prices, economic information, oil prices, investor money flow, interest rates, and important news. The next step is understand what is happening. We don't want thousands of pieces of information without context. We want to identify which development is actually important to USDINR. Then we form a view. For example, based on the current condition, USDINR have upward bias over the next few days. But having a view is not enough. When we then need to decide how to act on the view. That brings us a trading plan. We need to determine things such as what should, when should we enter, when should we exit, what levels or losses we are willing to accept, what level of profit are we targeting, and how much money should we put at risk. Risk comes before profit. This perhaps the most important principle of the entire project. Entire Trade carries risk. We cannot expect every prediction to be correct, even if our research is excellent. Unexpected events can happen. A central bank can make unexpected announcement. Oil prices can suddenly move. Global markets can react to international event. Investor can suddenly move large amount of money. Therefore, our model must not simply ask how much can we make. It must also ask how much can we lose. That is why risk management is a separate part of our workflow. This objective is not to take biggest possible trade. The objective is to take control risk. What are we ultimately trying to achieve? Our goal is not to predict every movement of USDR. That would be unrealistic. Our goal is create a disciplined and repeatable research process. Every day, the system follows structured approach, collect information, understand what is happening, develop a market view, plan the trade, control the risk, and then evaluate the outcome. Over many trades, we want to discipline process produce attractive and consistent result. Think of it like a professional cricket. The team doesn't expect every ball to result in a boundary. Instead of following strategy, manages the situation, avoid unnecessary risk, and try to perform consistently over many matches. Our hedge fund model is follow the similar philosophy. We are trying to win every single trade. We are trying to build a process that we can make a good decision repeatedly while protecting the capital. Connecting to this our to final project, this is simple USDI in our workflow will eventually become the foundation for our large project. And the beginning, it may look like a simple research process. USDINR and to information and information to understanding, then understanding to market view, then market view to trading plan, and trading plan to risk management. But through these courses, we will progressively build a system that can perform much of this work automatically. And that is why USDINR is such a useful example for learning. It gives us a real financial problem. There's a real market data, there are real economic factors, there are real decisions, there is real uncertainty, and there is a real risk. So we are moved through this course. Remember one simple idea: we are not building a technology for sake of technology, we are building a system to solve real world problem. How can we systematically research USDINR, identify potential opportunities, make disciplined decisions, and manage risk? This is the purpose of our hedge fund model, and there is a problem that will connect everything we learn through this journey.